What is the alternative minimum tax, AMT, and how does it apply to corporations? Imagine a scenario where a corporation has managed to reduce its tax liability to zero through various deductions and credits. Sounds great, right? But what if there was a system in place to ensure that corporations contribute a minimum amount to the government, regardless of their deductions? This is where the alternative minimum tax comes into play. The alternative minimum tax is a tax system designed to ensure that corporations pay at least a minimum amount of tax, even if they have numerous deductions and credits that would otherwise reduce their tax liability significantly. It was originally implemented to prevent wealthy individuals and corporations from avoiding taxes entirely through loopholes. For corporations, the alternative minimum tax operates by requiring them to calculate their tax liability under two different systems: the regular tax system and the alternative minimum tax system. If the amount calculated under the alternative minimum tax system is higher than the regular tax amount, the corporation must pay the higher amount. To determine the alternative minimum tax, corporations start with their taxable income and make certain adjustments. These adjustments can include adding back specific deductions that are not allowed under the alternative minimum tax rules, such as certain tax credits and accelerated depreciation. After these adjustments, the corporation arrives at its alternative minimum taxable income. Once the alternative minimum taxable income is calculated, a flat tax rate is applied to determine the alternative minimum tax owed. For corporations, this rate is generally 20%. However, there are also exemptions and phase-out thresholds that can affect the final tax amount. It is important for corporations to be aware of the alternative minimum tax, as it can impact their overall tax strategy and financial planning. Corporations that find themselves subject to the alternative minimum tax may need to reconsider their use of certain deductions and credits to avoid a higher tax burden. In conclusion, the alternative minimum tax serves as a safeguard to ensure that corporations contribute a minimum amount to the tax system, even when they utilize various tax benefits. Understanding how it works can help corporations navigate their tax obligations more effectively.